What if we got rid of all forms of taxation and replaced it with one tax, a wealth tax? What would that look like? A wealth tax has been something made famous by politicians such as Bernie Sanders and Elizabeth Warren, but in fact it was the brainchild of ancient Rome. Before getting into what a wealth tax would do to and for the US, let's examine real quick what it did for ancient Rome. Most people in ancient Rome were poor, and the big names etched in marble and brought to life in history books were all relatively rich. So what the Romans did was tax wealth, everything from land to slaves. This was really meant as a racketeering scheme in order for the rich to shell out protection money to the government. Rome had one big asset, its military, and many legions were loyal to a general and not the state, although glory was to Rome. These armies were paid two ways, through conquest by plunder of their neighbors to expand their empire, and secondly, by protection. The rich had land, slaves, and other valuables. If they didn't want those things taken away from them, they'd get an audit and have all their land surveyed and slaves accounted for. A value would be placed on those assets and protection money was given to a legion or legions to keep those valuable assets intact. That's what ancient Rome gave us, but I suspect Bernie and Warren were thinking of something slightly different today. Let's remove every tax the US has in existence. Gas tax, income tax, property tax, whatever the states and feds have concocted, and replace it with a simple wealth tax on every single person in the US. To make things easier and fair, we enact a straight flat tax to be paid once a year. A program will need to be created where everyone must file online and some algorithm will spit out a number based on the assets and liabilities one has. Filers provide a ballpark range of their assets and they will be put into a category based on that net worth number. There will be zero deductions. If you own a house, you subtract your leftover mortgage and the algorithm will compare home values in an instance to determine your end-of-year appraisal of your house minus your mortgage. This goes the same for cars, take-home pay, and a broad spectrum of questions needed to be filed. Anything under $5,000 in value, or whatever number sounds reasonable, is not included in this calculation of wealth, so your computer, bed, bicycle isn't included as an asset. Of course, people will try to create as many liabilities as possible, but this program will do its best to use the data it has collected to create a perfect number for you. You complete your tax return online, and as a result, you receive a single number, your total wealth. US households hold just about $98 trillion in wealth. The federal budget in 2019 was $4.4 trillion, even though we took in only $3.5 trillion in revenue. We would only need a wealth tax of 4.5% for every single American. I was about to exclude those who didn't produce an income, but when I figured that a 4.5% wealth tax would essentially pay for the federal budget, how bad can that be? Someone who doesn't produce an income at all would only likely have $1,000 in assets. In that case, they're below that $5,000 cutoff and thus have no wealth and won't be taxed. The median salary in the US is $31,100, and assuming that person has a total wealth of $100,000 in 2020, that 4.5% wealth tax would be $4,500. In California, that's slightly less than the current system today. So what about the ultra-rich? What about someone like Mark Zuckerberg, who has a net worth of $78.3 billion? Well, he'd pay $3.5 billion. Now this might sound like a great idea, but here then lies the problem and something Elizabeth Warren failed to talk about when she proposed her wealth tax. Taxing wealth is difficult because most of this wealth we've been calculating are in the form of assets, meaning if wealth was in the form of cash, then sure, this would be easy, but they're not. Wealth, most cases, are in the form of real estate, stocks, paintings, gold, and private businesses. All these things cannot easily be turned into cash. And if they were turned into cash to pay this yearly wealth tax, it would disrupt the world economy. Even though Mark Zuckerberg is worth $78.3 billion, all that is tied up in Facebook stock. If he had to unload $3.5 billion worth of Facebook onto the open market to pay these taxes, that can cause repercussions to other shareholders and ripple down to salaried workers who rely on business from Facebook. Even worse, what about the wealthy folks who have all their assets in a private business? Do they have to sell a share in their company every year to pay this wealth tax? Digging into it further, it might sound promising, but it has one major flaw. If you enjoyed this video, please consider dropping a like and subscribing to my channel. As always, take care of your money.